Hi, welcome back to Joe Blogs. In today's episode, I want to talk to you about what's happening in the Russian economy and share with you some really interesting data that shows how much oil and coal China purchased from Russia in April. And I can tell you that in the month, there was a 13% fall year on year in the purchase of both oil and coal. And I think that's really telling because Russia at the moment is struggling to find new buyers, and China and India are basically what it's relying upon in terms of the mass volume of oil that it's shipping. It's selling still around 2 million barrels of oil per day to China. But this drop indicates that China is now finding these fossil fuels from alternative sources. And if you're following the channel, you'll know that currently Donald Trump and the USA is threatening Russia with a 500% tariff. But interestingly, that tariff isn't going to be applied directly against Russia. It's going to be applied on any country that's found purchasing oil directly from Russia. So basically, it would hit China and India. And that would mean that all of their exports into the USA would then be hit with a 500% tariff. And that would completely wipe out that trade between those countries. And that is one of the biggest export markets for India and is the single biggest for China. So what we're seeing in April may be an indication that China is getting itself ready to start moving its purchases to other countries. This chart shows Russia's exposure to both China and India in terms of crude oil and coal sales. And the scale across the bottom of these charts is shown in metric tons. So it's millions of tons. And you can see that since the start of the Ukraine war, so over the past 3 and a bit years, China has been the single biggest buyer of both of these fossil fuels. And in terms of coal, it's bought more than all of the other countries put together. So that represents huge exposure from Russia's point of view. And when you look at crude oil, it's the single biggest buyer apart from India. And when you put those two together, that's basically the whole of Russia's market. So if that 500% tariff was applied, it would completely wipe out Russia's revenue. It'd be an absolute disaster. Now, before we go on any further today, I want to talk to you about NordVPN, who I've partnered with for today's video, and who are offering Joe Blogs viewers an exclusive 4 months extra on a 2-year plan. Unfortunately, cybercrime is becoming a more and more common occurrence, and it's not just you and I that are being targeted. It was recently reported that multinational telecommunications giant BT Group had to shut down some of its servers following a ransomware attack by a gang called Black Basta. So it's never been more important to protect yourself online. And NordVPN offers a feature called Threat Protection that blocks access to websites known to host malware, including ransomware. So NordVPN is fantastic for protecting you every single time you go online, making sure that people can't steal your identity or your passwords or any money from you. But it's also brilliant for opening up a world of entertainment because it means that you can access TV shows and movies and sports events and other things in areas that you normally wouldn't be able to have access to. All you need to do is change your location and access all of that entertainment and information. And the fantastic news is that NordVPN is offering Joe Blogs viewers an exclusive 4 months extra on a 2-year plan, which you can access by going to nordvpn.com/Joe Blogs or clicking in the link in the description below. And the great news is that they also offer a 30-day money-back guarantee. Now, in terms of what's happened in April, this table shows the breakdown of where China purchased its oil from. And you can see that Russia is still at the top of the list for April 25, having provided over 8 million metric tons of oil. However, Malaysia was a close second. And if you look at the year-on-year change, you can see that the purchases from Russia were actually down by 12.9% year on year. In the year to April 24, China purchased almost 9.3 million metric tons. And if you look at the movement from Malaysia, you can see that there's been an increase of almost 100%, 96.8%. In the year to April 24, Malaysia provided just over 4 million metric tons. In the year to April 25, it was just under 8. Now, you might be thinking, I don't remember Malaysia being a major oil producer. I haven't seen them on the lists when you've been showing me which countries have the largest oil reserves in the world. And you'd be right if you were thinking that. And Malaysia is actually a middleman point. And it's rumored that a lot of the oil that's moving through Malaysia is actually coming from Iran, and it's sanctioned oil that's basically changing hands. It's looking like Malaysian oil, but obviously it didn't originate from Malaysia because they don't have the sheer volume. The third largest purchases were from Saudi Arabia, and that was just over 5.5 million metric tons, which interestingly was also down by 12.8%. So you can see that China is basically swapping out the purchases from Russia and Saudi Arabia with Malaysia. And if we look at Iraq, that was also down by 17.1%, down from 5.5 million metric tons in 24 to 4.6 in 25. And further down this list, you can see there was also a big fall in purchases from Oman. So what we're seeing here is China changing its purchasing patterns. And this isn't because that oil is significantly cheaper. Well, it might be in terms of, I'm not sure how much discount Iran is actually applying to its oil compared to Russia, but obviously Russia is also offering a discount. But what we're seeing here is a deliberate strategy by China moving away from purchasing oil from Russia, reducing its exposure to Russia, and gearing up with purchases from other countries. And if we have a look at the next chart, it shows us what's happened to coal purchases over the past 12 months. And this is an interesting chart because it shows that the biggest single country that China is purchasing from is Indonesia. And in the year to April 25, it bought just under 14.3 million metric tons. But year on year, that represented a 20% fall. And if we look at Russia, it purchased just under 7.4 million metric tons, which represented a fall of 13%. And actually, all of the countries that China has been buying from have seen a reduction. And we'll go on to talk about the reasons why later in the video. But if we focus in on what's going on with oil first, this chart shows China's purchases of crude oil from Russia over the past 12 months. And the scale on the left-hand side of this chart is shown in millions of metric tons. And what you can see here is that there was an increase between July 24 and December 24. So we've got an upward movement from around 8 million metric tons to 8.5, just above 8.5 on a 12-month rolling basis. However, as you can see, over the past 4 months, there has been a significant downward trend. And the amount of purchased in April 25 was almost the lowest over the past 12 months. But if we have a look at the next chart, which shows the value of that oil, so how much revenue Russia is actually receiving in terms of these purchases from China, you can see that the amount in April, which was down to around $3.75 billion US dollars, was the lowest that Russia has received over the last 12 months. So we're seeing a downward trend, and because of the falling price of oil, Russia is now receiving less money for those purchases. And if we have a look at this chart, it shows us what China is actually doing in terms of the volume of its purchases. So you can see that it's actually building up its crude oil reserves. That's shown by the blue line, which shows the total amount of crude that China has. And the orange line is the level of refinery runs. So this is the amount of crude oil that China is passing through its own refinery network. If you look on the left-hand side here, you can see that the scale is shown in millions of tons. So when you take a step back and look at what's happening here, we're not seeing China scaling down. They're not reducing the amount of oil that they have or the amount of oil that they're processing. But what they are doing is changing where they're buying it from. So they're reducing their exposure to Russia and increasing purchases from other countries. And if we look at this chart, it shows the movement in China's purchases of oil from Malaysia over the past 12 months. And you can see a significant upward trend here. So that's counterbalancing against the downward trend that we just looked at for Russia. So we're seeing a significant shift here. It would be interesting if that tariff was applied, if that was introduced by the USA, and they're saying that they may do that if Russia decides that it doesn't want to proceed with the peace talks. And basically, I think what would happen is that China would then gear up its purchases from all of these other countries, and Russia could be facing a world of pain. Now, in terms of the coal that China is buying from Russia, this chart shows the volumes over the past 12 months. And again, here you can see that between May 24 and December 24, there was a general increase in the amount that Russia was purchasing. However, over the past 4 months, we have seen a downward trend, and the volume of coal purchased in April was the lowest out of any of the last 12 months and significantly lower than all of the other months. And this chart shows the value of the coal purchases that China's been making from Russia over the past 12 months. And you can see that there's been a significant downward movement here. Back in May 24, China was paying around 800 million. By April 25, that had dropped to 650. So Russia is losing a lot of revenue here. And one of the reasons why China has scaled back its coal purchases, and we saw earlier in the video that it's not just Russia, it's been scaling back its purchases from every country, is because it's ramping up its own coal production. This chart shows the coal production in China over the past 12 months. And you can see that in May 24, it was sitting at around 385 million metric tons. However, there was a major push, and by April 25, that had ramped up to just under 390 million. So China is trying to be self-sufficient. Obviously, it's still importing a lot of coal, but it's importing less coal from Russia than it used to. Okay, so what does all of this mean for Russia's revenue? Well, this chart, which you may be familiar with if you follow the channel, we've looked at it on numerous occasions, shows the total amount of revenue that Russia is earning from its fossil fuel sales, and it's split into different colors here. We've got seaborne crude oil at the bottom, shown by the purple section, so that's basically oil that's going on ships to the buyers. We've then got oil that's being sent by pipeline, that's predominantly going to China now. You can see at the start of this chart, it was a larger section and it's decreased significantly because the EU is no longer buying that sort of oil. We've then got seaborne oil products. So that's basically things that have been through the refinery process, like gasoline, diesel, kerosene, which is shown by the red section. Pipeline gas, which was predominantly going to the European Union before the war started, is now only going to China and a couple of selected countries in the EU who are struggling to find alternatives. LNG is shown as the next section, and then at the top we've got coal in the grey section. And what you can see here is that back at the start of 2022, Russia was earning a lot of money from all of its different fossil fuels. And actually in March, April, May, it hit record levels. However, over the last 3 years, you can see there's a significant downward trend here in how much revenue Russia is earning. And the figures for April 25 are actually the lowest out of every single month on this chart. So Russia is earning less today than it has done at any time since the war in Ukraine started. And one of the reasons for that is because, well, it lost a lot of sales from its pipeline gas because of the EU sanctions that were put into place. But it's also seen major fluctuations in terms of the amount of oil and gas revenue that it's earning from just general sales. And China is obviously underpinning a lot of the revenue that Russia has received over the last 3 years. And if China was to change its buying patterns and stop buying from Russia, it would be devastating from Russia's perspective. And this chart shows the amount of tax that Russia is earning from all of its sales. So we've got two different lines plotted here. The dotted line shows the price of Russian oil, and you can see that over the past 3 years, that's moved in a general downward trend. It's on the scale on the right-hand side. Immediately following Russia's invasion of Ukraine, which started in February 22, we saw an increase in the price of Urals oil. It was up at around $90 per barrel. However, Russia then had to start offering discounts to encourage countries like China and India to take more volume. And so the price came down to a low of around $50 in the middle of 2023. It then started tracking back up as general oil prices started to rise, and Russia found more ways of actually transporting its oil. However, over the past 4 months, we've started to see it coming back down again, and it's now sitting back at that lowest level of $50 per barrel. So the current situation is the worst that Russia have experienced at any point in the past 3 years in terms of the price per barrel. And in terms of what they're earning from tax, you can see that there's been a major downward trend from the start of 2024. It's been tracking down the amount of tax, the revenue that Russia is earning, and in April 25, it's come in at the lowest level since July 23. So there was initial shock when Russia first had the sanctions applied against it, and it was struggling to be able to move a lot of its oil and find buyers. But by the end of 2023, Russia had found effective ways using the shadow fleet and encouraging China and India to take more volume. So the current level of income that Russia is earning is the lowest that it's seen for almost 2 years. And this is a major problem from Russia's perspective. So what's the summary and conclusion today? Well, I wanted to post this video because I think the data that we've seen for April 25 is really quite interesting and very concerning from Russia's perspective, because what we've seen is that China, which is the single biggest buyer of oil products and coal products from Russia, it's also one of the biggest buyers of gas as well, but we don't have the data for gas. What we've seen from the April data is that China has reduced the amount of oil and coal that it's purchasing from Russia by 13% year on year. And that represents a significant amount of revenue, but also a significant volume of oil and coal. And we've spoken about this a lot in the past, that Russia needs to find buyers for its oil to keep its oil industry moving, because it wants to keep extracting oil at the current rates. It's pulling around 9 or 10 million barrels of oil out of the ground every single day, and it's exporting over half of that oil. So it needs to find buyers to keep those flows going, because Russia doesn't have anywhere to store that oil. If China suddenly stopped buying 2 million barrels of oil per day, Russia would have to cut back on its production because it wouldn't be able to find an alternative source. And so the only other option it would have would be to stem the flows. And that can be disastrous from a production point of view, because if you stem those flows, if you keep that oil under the ground and try to slow down the extraction rate, then you can get issues with regards to clogging, where the oil starts to coagulate. And then when you want to speed it up again, it can be really problematic. And let's not forget that this oil is in some really inhospitable places. Climate is quite cold in a lot of the regions where Russia is drilling oil. So obviously it's okay in the summer, but in the winter months, it gets very cold. And if you slow down that extraction, it can cause you major problems. And Russia obviously is experiencing problems anyway, because it's lost a lot of its partnerships. Companies like ExxonMobil, BP, and Shell all exited Russia, and they built those facilities and they have the technology to make sure that it keeps working. And Russia's also struggling to be able to find replacement parts. So it can't buy parts from any of the manufacturers who built them because there's sanctions in place, and it also can't access the latest chip technology. So there's a lot of technical issues that Russia is having to get over. And the last thing that it needs is its largest buyer scaling back on its purchases. But what we've seen in today's video is that's exactly what's happened in April. Now, it might be that China bounce back and they start buying lots more in May, June, and July. However, if this is a trend, if this is China protecting itself, making sure now that Donald Trump is in office that they're not going to do anything that's going to cause themselves a problem with regards to future trade, then China may well be gearing up to avoid being so reliant on Russia. And that would be a complete disaster from Russia's point of view, because there isn't any other option in terms of finding another buyer. It can't find another India or another China. If they stop purchasing the volume that they do, they simply don't exist. And what we've seen in today's video is that Malaysia is now selling a lot more oil directly into China. And that oil is reported to be coming from Iran. So Iran is now finding a way to get around its sanctions, selling to China. China is happy to buy that oil, but it's interesting that it's preferring to buy Iranian oil via Malaysia than taking more from Russia. And that represents bad news from Russia's point of view. So the overall summary of today's video is the latest data we've seen coming out of China is that they've scaled back their purchases from Russia. That represents a major threat to the Russian economy. And if it continues, it could represent a real problem for President Putin and the Russian state. So hopefully you've enjoyed today's video. You found it useful, informative, and thought-provoking. If you've liked what I've said, then please give me a thumbs up. Thank you for watching this video all the way through to the end, and thank you so much to everyone that's supporting the channel. If you bought me a coffee or sent me a YouTube super thanks, really appreciate that. And if you're a long-term supporter, either through Patreon or YouTube membership or buy me a coffee membership, thank you, really keeping me motivated. And here's something to put a smile on your face.